So Bruce, you tried to escape the rotation, and I just wouldn't let you go. You're too important to to let go with your looks and your point and figure chart. So it's great to have you back, buddy.
I tried to get out and they just pulled me back.
Yeah, we're like Hotel California. You can check out, but you can't leave. And also, when you're a guest at ForexAnalytix, it's kind of like the mafia. So
Oh,
yeah,
and you guys,
you're a made
yeah.
man you're a made man in this community. So
And as
uh
always, you're
yeah.
razor sharp today, all of you.
All right. Well, Bruce, really interested. So much has happened since you and I last talked. I think the last time we talked was before the election, wasn't
I
it?
bet that's true. Yeah, I bet
Yeah.
that's true. And
Then we had that big sell-off in equities to 4,800. So what's on the menu for you? What are you seeing in this environment? This Trump 2.0 markets that we're trading, any comment on it's more difficult to hold positions? Are you telling people to reduce leverage and use wider stops? How are you approaching Trump 2.0?
well, I thought a request from to you
Blake?
and Blake is to maybe put that Bitcoin chart back up.
Okay, let's start there.
And
I can. Do
yeah,
you want me to put it up?
yeah, Blake, put it
Hey,
back
good
up
morning,
there
Bruce,
if
by
you.
the way.
Good morning.
Good
Gosh,
morning.
thanks
Here,
for having
I'll
me
put,
back.
Oh
yeah.
yeah,
It's, always
There you
love
go.
to
I
hang with you guys.
you know I wasn't going to let you escape. Some people have escaped, but we had to take them out anyway. So
Well,
go ahead, bro.
well, this accumulation over here on the left is substantial. You can see the hinge, kind of a hinge movement there as it comes into a conclusion. And this is the period from at the beginning of the chart. Uh, yeah, well, and I'm looking
Left.
actually
Yeah.
even
Oh yeah.
further to the left,
Yeah.
but just to that sets up its subsequent move. And you can see how it hinges, an old Wyckoff term where higher lows, lower highs. But what that really is indicative of is absorption. And so smart money is absorbing Bitcoin in here for a move higher. And when it starts to cascade up out of that hinge and the prior high, it just takes off. Now here, this is interesting. What has just happened in this sharp trend up that we just had is that, yeah, in this recent test of that high, the thing we absolutely have to have, and this is the thing about Wyckoff, and I'll talk about this more in a minute with the stock market, is that we just follow the tape, where we're just looking at the bars, looking at the volume, day by day, week by week, and so we notice that it really rallied sharply up to a minor new high, up past that X point. Thank
Yeah.
you. And then it comes right back in again. And this is what we absolutely have to have if Bitcoin's going to go higher, is that we need to see Bitcoin consolidate in a tight range, dull, diminishing volume throughout this tight range, right around the highs. And what would have been even better is if it had jumped out above the X
Yeah.
point and then stayed up and out and then got dull and tight and quiet.
Okay.
And the fact that that's not happening here and it's pulling back in, we have to really be on our toes, as Blake pointed out, for this to drop right back down towards the lows again. And the difference between this rally phase that we just went through, which is very sharp, short, sharp, and just recovered the losses that occurred, is that look at the difference over here in this reaccumulation that we just looked at. And that
Yeah.
is that look at how it just doesn't give up any ground on its way up to resistance and then jumping out. And so, see, this is what needs to happen here. And it's so far, it looks very troublesome to me. So if it breaks down, we don't want to go more than a third retracement, as much as a half, which you can see right there with the fib retracements.
Yeah,
And that's it. And if it goes a half, and that's a lot. It would be something that we would,
90.
yeah, we would want to be protected against that, which also pulls us back to the moving average, more or less.
And also, if you believe the correlation may have something to do with, so I'm really interested in seeing your S&P work because, there are times and sometimes Bitcoin leads what's going to happen. Do you consider it a liquidity measure, Bruce,
Oh,
on
sure.
other things? Okay.
Absolutely. As a matter of fact, one of my favorite little charts that I didn't bring it today, but is to go back over many, many years and correlate Bitcoin and Nvidia, which makes a lot of sense,
Oh,
right?
that's interesting. Okay.
Yeah, they go together, but also they are the two favorite vehicles for speculation, and
Yeah.
so we know why they're related to each other, but also we know that speculators, love when they have high liquidity. The system has high liquidity. They love to campaign Bitcoin and Nvidia, and look at them both now. So Bitcoin or Nvidia started
You're not
first, and
showing
it's
your screen right now, Bruce, unless you,
yeah, and I
I
don't
mean,
have it in front of me, unfortunately,
oh, okay. All right.
but thank you. And then but the thing here is just that uh, Nvidia has been going sideways for nearly a year now,
He hasn't
and
made a
so
new high since last August, a
there you
year
go.
ago. Yeah.
There you go. And so, if Bitcoin and Nvidia are correlated, and I think that's a great exercise for people to do, then, Bitcoin, I think, is at risk for doing the same thing with a lag, bit
Yeah.
of a lag. Anyway, so this is an old opening slide that I had from years ago because I tried to get out, but they keep pulling me back. And so this is an old distribution study that we did together.
Oh,
And
wow.
yeah, and so this guy on the left, see, and I'm here for therapy today. I'm putting you to work, Dale,
Yeah,
because
I'm known as a trading psychiatrist.
good,
So
because
what
I
what
need you today, buddy.
all right.
All right. So this guy
Lay
on the
down
left,
on my couch.
this is like the 1906 political cartoon. And this is Mr. Wall Street over here on the left with his feet in the Epsom
Yeah,
salts and so on, and a block of ice on his head. And then
yeah,
the chart. So this is a very old chart, cartoon. And then the guy on the right is also, I think, even an older cartoon. And you can see the bulls bulling him up to the peak. And that's the
yeah.
public right there. And so we can see that that's what happens is that the bulls are chasing the public up. And if anybody has interest in Wyckoff, they can go to Wyckoff Analytix, and there's lots of free material and cool stuff. Ramon and I do a weekly Wyckoff call, also Wyckoff Market Discussion. But today we're going to talk a little bit about the concept of distribution, as Blake had just shown with that very cool schematic that he had. So maybe we'll come back to these, but these are just sort of like roadmaps, and I'll show you why in a minute. First of all, this is the reason I'm conflicted and I need counseling, and that is that I've been a bull now since really mid 23, and I'll show you why, and have been campaigning this market up. But now there's still reason to think the market can go higher, but also there's some real conflicting indications and things that give me caution. And so here, seasonality, this is the seasonality for 2025 based just on post-election years going back to 1949. And so the blue line represents what the average post-election year looks like on a seasonal basis. And this red line is what we've actually done up through Friday. And so you can see there is a rhyme here. Sometimes they can be different, but you can see that the low came in late February and then into April, early April. Well, in fact, the market made its final low with that big whoosh down the beginning of April. And then it started its uptrend, which is what the seasonals had suggested would happen. And now from here, we see weakness really through the end of June. And then higher highs into August, bigger correction in September, and then high into the end of the year. And so on balance, this is a very much trading year, as we have seen, but it has an upward bias to it.
So
And
you just did a great self-diagnosis, and I have my patients at first talk about what's on their mind. So the conclusion that you've come to, I think, is correct, that it's not that you have to be more tactical this year, where you just can't buy the spider and go the golf course and ignore it.
well,
So you're healed.
boy,
You're healed.
well, I have to give you the conflicting part.
Oh,
So
I thought I
yeah,
guessed
yeah.
it.
Well,
All right.
but my my half hour's not up yet.
Okay.
So
I'll let you. I'll let you know, man. You're right.
okay,
You
all
still
right.
have half a session left. Go ahead.
So this is a decennial pattern. I love these, and they either work really well or they don't work at all. 70s didn't work at all. So this is the 2020s, 0 year to the end of the 9 year. And if you look at the 70s, not at all, very high inflation period. The 80s was exceptionally good, high correlation. But this red sort of line here is the S&P put up against the decennial so far. And so it's actually pretty darn good. And you have to kind of look at this COVID period over here on the left. The low that we got at the beginning of the 0 year actually should have come in the middle of the 0 year, but we got a low in the 0 year. And then we got a high in the 1 year, which was a lower high on the decennial, and then down we went, and the lowest low we generally get is in the middle of the 2 year. Exactly what happened in the 80s as an example. And then start to work our way into a really good uptrend. And of course, what we all notice is that the 5th year is just exceptional. And so, I
Here
mean,
we
it's
are.
just straight up. And here we are. Well, we've had this big hiccup here in the 5th year, and we're starting to work our way back up again. So the question becomes, can we get to a new high and keep going? And then if that is the case, and I think that would be really dependent on tariffs, among other things, working and the plan working, et cetera, et cetera. So this is what's going on. And so far, I think there's a rhyme between the decennial, and this is all the way back to 1897, every year lined up. And
Maybe you resolve your conflict with your point and figure work, which is
well, it's coming.
all
It's
right.
coming.
Oh, go
So
ahead.
then here is we love to look at trend work, all time frames. Here's the trend channel going back to 2011. This is effectively the trend of the bull market. And look how beautifully, this is a Wyckoff concept. He said, you'll set the stride of the trend. And this is in all time frames, very, very early on. And that, so you have, in this case, we have two adjacent highs. As soon as we get that second high, which we could actually start here, we extend that out. And this is called a supply line because it's over the top of the trading. And then we have an oversold line where we draw a parallel across the intervening low between these 2 points. And you can see how well this has defined the upward stride of the bull ever since. And it's been an exceptional bull, incredible. But as is pointed out, markets are cyclical. And on this pullback that we had in 25, we went right to the oversold line and rallied. And I want to point out that here's the 21 bull market top, and this is a Keltner channel. So this Keltner channel, and this is monthly data, this Keltner channel, it rode across the top of this Keltner channel for about 6-9 months. And then we went into the 22 bear, which actually broke the low of the stride and then, reaccumulated itself and got back in. But so far, this bull market has only gotten to the midpoint of the advancing trend channel, and it got back up to the top of the Keltner, where it rode along here and then it broke. So now I really want to see this stay above the oversold line and start to rally to new highs. And do note that because it didn't get back to the supply line, that this to me is a form of internal weakness and divergent characteristics. And if we do start to show weakness and break down through the low of the oversold line, I believe that the low band of the Keltner is achievable. And
what's that, 4,500?
Yes, 4463.
Because there are some counts that would allow for that before the next major advance.
So now, yeah, so looking here, this is the part where I get conflicted, is that here's the last, so 2015, and it breaks below on the MACD, and this is monthly data, so the market followed the MACD down. And then also you can see here's the 21-22 top, which was very overbought, and it broke that down and then had an important reaction. And here we are just turning down below this signal line here, which you can see down here. Yeah. And so this is something to watch very, very closely. And I think if you confirm it with this break up here of the lower oversold line, I think we have to be, as you point out, very tactical and careful.
Okay. I always think tactically, but go
yes,
ahead.
You do, and it's the way we have to treat these markets always. Now, this is a chart I put up here before, and this is from January of 23, and this is the point that I thought that the accumulation was finished. And here's our hinge, which is just like the hinge we looked at in Bitcoin. And it counted at that time, we were at 39.47. And at that time, we made the case for a new bull run, even though interest rates were going up, they were high. People were very, very, very bearish at that time. And people thought I was certifiable, but I said this market could go 62.75, 65.50. And in fact, we got up to around 61 so far, and we still have the potential for higher, and that would be consistent with our decennial pattern. This is an accumulation study, same data, just slightly different way to construct the chart, and it counts up 6350, 6700. And so there is the potential here for higher prices. And I always want to be a bull. I always want to stay with the existing trend. And so I don't know how much time we have left, but I'm just going to put these up.
Don't worry about it. Just go till you're done.
Okay, thank you. And so you can't give me a diagnosis until I do.
I already have it. Written
oh,
down.
You have it.
I've already written the prescription, buddy. So go ahead and finish. Go
ahead. Anyway, so here are the two distribution schematics that we just looked at the beginning. This on the left is the NASDAQ 100. On the right is the S&P, and this is the 21-22 bull top. And I only put these up. Please screen capture them, really study them if you care. these are the Wyckoff characteristics of distribution unfolding on this chart. And so you can see here that the thing that you're noticing is the increased volatility as you go into the right side of the chart structure. And there's a very good reason for that. Look at the volatility just keeps showing up over here. And we call these signs of weakness, lower lows. And so these, and you can see them on the schematics, is that this is a real indication that stock's in weak hands. Stocks can't go up. No commodity, no index, no stock can go up unless the underlying asset is in strong hands. And so this is what we're effectively attempting to ascertain from looking at the chart and the structure and the volume and the spreads, as we're trying to determine whether stock is in weak hands or strong hands. Strong hands is going to drive stocks higher. And here, this is just simply not the case.
The narrative is that it was retail that bought it and they bought the dip. There's a ton of institutional cash on the sideline. Therefore, maybe institutions can generate a correction for an entry so they don't have to just be squeezed in. But the argument is there's a lot of fuel to get.
And that's exactly what Richard E. Wyckoff would say. You're absolutely in alignment with him, and it's just the truth of the markets.
Yeah,
and it's just lost on a lot of people that this is the way markets actually function, and you need to really own that knowledge. So now here is the 2025 top that we had, and then I took account of that.
Nice.
This is April of 25. And you can see here that it counted 5,000 to 48.75, and we went to 48.35. We got within one box of fulfilling perfectly our count. And that's where that low came in early April. And then it was confirmed by this redistribution right here. And here's the chart up to date through Friday. This is the S&P. And this is the stocks above their 50-day moving average, which is a really good way to look at breadth. And this, just don't capture this chart if you care. And this is the way I keep my journal, my notes on the market. So if you were to roll this chart back, there'd be notes and notes and notes and notes through history, because I can go back and look at these, and I know exactly what I was thinking and projecting. Okay, but here, what I want to do is I want to get into this area today. And I want you to think in terms of what happened back in 21, 22. And here you can see this is where we are now. And so this is through, I believe it's through, the end of the month. And this is a classic distributional structure. And this is exactly why I'm pretty worried about this market on a
short-term
business cycle basis.
Okay.
Because could we be setting up a condition that is like 21, 22 was, and going back, I mean, here is the distributional structure of that period before. And then this is what we got, which was a relatively modest bear, but it was painful for many. Yeah. And here we all note that this is bigger. Yeah. So bigger structure means likely bigger decline if it starts to break down. And
how about velocity of the first break? Does that play a role?
Absolutely, because as you saw over here, look at these two signs of weakness.
Yeah.
And these two signs of weakness are very important, because they break this low here, and then you get this really good rally into an LPSY. Well, look what happened. We had a very, very deep break that not only took out this low, but took out this low, and it
went to the breakout. 4,800 was a breakout. If you go left.
Yes, you're way ahead of me. Yeah, and see, that's exactly it. It pulled all the way back to the high of the old bull market.
Yeah.
And so this is and now I'm going to jump ahead to a couple of other important chart. So this one here is just a closer look with my Wyckoff notations so that you can sort of see my thinking here. This is a sign of weakness, bigger sign of weakness. And look at the volatility come in. And this is what I was just talking about with Bitcoin, is we do not want Bitcoin to come back down again and come down hard, because that just means that we're in some kind of a big range bound structure or worse. And here, this decline, which is exactly Dale's point, is a huge red flag, because this is way too much volatility for a bull market. You get this kind of volatility or this kind of volatility, but you don't get this.
Yeah, I think
And
this was the biggest Sigma event. I think that's what they called it, like a 3. Do
three
you know what it
sigma.
is? Sigma? It's kind of like the Richter scale for markets. Anyway, it
Yeah.
was huge.
And so, and this compares against all the other comparable events in the past, and it stands out as unique among even some of the other big bear markets. So that's a good point. And so here's the schematic that might be involved here: upthrust after distribution, secondary test or an upthrust, buying climax, automatic reaction, and then bang. And now the big question, Dale, becomes, is this all part of a bigger distribution?
Yeah.
And so what we really need to see here is consolidation without giving up much ground, and then a continuation of the rally back above these highs for our seasonality work to be useful, et cetera, et cetera. And then I'm going to button this up with one more chart. And well, let me do two. And that is, here's the NASDAQ. So here's what the NASDAQ looks like. 21, 22 bull. Here we are now. Bigger structure here than here. And you can see that we pulled back right to where we broke out on the NASDAQ 100.
Yeah.
And, but I want to really emphasize a point on the chart here back in 22. Look at this rally phase that we had that went to a lower high. We call that a last point of supply, went right up into the moving average, stalled there, and look at this like inverted V-top reversal. And down it went very hard. And note that the stocks above their 50-day moving average, both on the NASDAQ 100 and the comp, which is what these two data sets are, is look at here on the 100. It went all the way down to about 10% stocks above their 50-day, and then rallied all the way back up and almost touched 80 in very short order, straight up. And that's exactly what happened here. And
Okay.
this was in the context of a bigger bear market, bigger
Yeah.
decline.
So you'd imply that's a possibility here.
So look here. I mean, this got a little weaker, went
Yeah.
slightly below 10, and then it rallied up slightly above 80. The rally phase was, I think, even stronger here than
Yeah,
here.
it
But
was.
do we have the capacity here to stop this advance and then start to turn down? And could we have an inverted V top? And that's the thing that I have my spidey sense about, is can we hold here, tight range, consolidate, and then take out the highs here? Or if we fall below the buying climax peak of this zone, which is this area right here, approximately
55, 56.
20,500.
Oh, we're on the NASDAQ. That's right.
Yeah,
Okay.
sorry. Yeah, I should have said
Yeah,
that.
that's right. 25.
And so if we break back below that, I would just be super cautious, because it could very well, you could find this market back down to these prior lows quickly. And that would be a real sign that we're completing distribution. And this is not a reaccumulation for higher prices. And last
Okay.
chart here, this is call to put ratio for equities.
Yeah.
So just SIBO call put. And so I inverted it just so that it would be pointing the right way. And something very unusual happened back starting in October, really September to October, is that usually when you get a lot of call buying and you get into the optimism zone here in the yellow, it pulls away from that pretty quickly and starts to correct. But here in September, October, it got up here and it lived up here all the way into February and made its highest high of call buying, call activity here in late January, early February.
Yeah.
And so a lot of optimism, but the market was going nowhere. So
Nowhere.
people were optimistic, but the market wasn't giving them confirmation.
Right.
And then we got this break. And this break did not even put us into the pessimism zone. It got us really close before the rally started. But now this is the
Oh
part.
God, you had the gradometer clock broken under extreme fear.
Yes, exactly. And here, yeah, exactly. And we didn't, I mean, so the put activity was not fierce.
As
I mean, it was
extreme.
bad.
Yeah.
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 But the other part is, and this is something I've been looking at this data for 40 years. And the other thing that happens is when you get into a new bear market or you get into a new bull market, in the case here, the optimism comes right back. And so here you are, look at this rally phase. It's a lower high, but the call activity here actually is a 10-day moving average, the dark blue line. This is actually the highest it's been in over a year. So
Okay.
it's actually got higher than it even did back in this area where it was just living up here.
Yeah. So now I know
And
why
so,
you're conflicted.
well, no, don't tell me you're conflicted. I need,
No, you know
I
what?
need guidance.
All right. Well, here's your guidance for confliction.
Thank you.
Confliction is also means I don't know. And a lot
Yes.
of people can't even say that because they think they should always know.
Yes.
And you don't always know. But
Yes.
what you do know, this is a prescription, that you have triggers and methods and levels that are going to help you know. So it's okay to wait until you know and just let the market trade until your work gives you a confirmation that puts the probabilities in your favor. So that's why you're conflicted, because you're awaiting confirmation. And we all feel uncomfortable waiting.
And Dale, that's exactly why I'm here today. I
Okay.
needed that. I needed that.
Okay.
And I will finish my comments with just saying a dear old friend who was a retired Major League Baseball player, had a great career. And he used to say this to me quite often. He says, sometimes you never know.
Yeah, that's
Yeah.
right. And people aren't. And the other thing that people choke on, I was wrong.
Yeah. Yeah.
Because
So
people have their egos
yeah,
for these things. So it's okay to not know. It's also okay to be wrong if calculated your risk before you took the trade.
yeah,
And I go through it all the time. I don't know. I don't have conviction. I don't know what to do. People want ideas, and I just have to say I don't know, but I will. So that's it. You're healed and cured, and
and
you
Dale,
know,
you
yeah,
gave us all wise words, and we're
yeah.
grateful.
Tonight your assignment is to stand in front of the mirror and say, I don't know, and it's okay because I will, 10 times.
Okay, I'm doing
All
it.
right, I want it
And
on
then
recording and sent to me. I'm kidding.
and and then I'm going to sleep like a baby.
Thanks for being back, Bruce. Some great
Dale,
looks.
so great to be with you and with everyone. And
Yeah,
see you
it
next
was
time.
fun. It was fun.
Always fun. Always
All
fun.
right. All right, everyone. Good hunting. You could join the team in 7 minutes on the Morning Edge. You could find Bruce. He showed you where to do it, and on X at RD Wyckoff. And Bruce's work is elite.
Oh,
All
you're
right.
too kind. You're too
All
kind.
right. All right. Well, if you know, it is. So everyone have a great day trading. Don't just count your pips, count your blessings. People are thanking you, Bruce. You're welcome, everyone. And we'll see Bruce in another 90 days or so because he's not getting away. And now you know why.
Thank
So
you all.
thank you, Bruce. My trading warrior brother, Bruce Fraser. And
Take
this
care,
is a
everyone.
wrap. This is a wrap. Adios, everyone. You're welcome. You're welcome, Laura, Mandy. Yeah. Oh, Linda Rashke's has a poster of you, Bruce, on her wall. All right. So you're a famous guy. Anyway, that's it. That's a wrap. Good luck the rest of the day. See you for Turnaround Tuesday.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.